Hello, everyone, and welcome to today's webinar, the topic of which is SWIFT Customer Security Control Framework and how to remain compliant in this year, 2022. The session is hosted by EastNets and moderated by Finextra. My name is Gary Wright. I'm the head of research at Finextra, and along with the panel that I'll introduce you to in a moment or two, we're going to drive a good, insightful discussion on this topic and the relevance it has in today's market against the background of conforming to the framework, how the industry tackles the issue, and also some of the practical business implications, particularly against the background of the cyber fraud landscape. So the order of play is that in a short time, I'll ask each of our speakers to take a couple of minutes out to frame the conversation, to set the scene for a deeper discussion that we'll have as the session moves on. And throughout the whole session, you have access to a link where you can ask a question, make a comment. I encourage you to do that, and we'll pick up on those points and introduce them to the conversation along the way. I do have a couple of poll questions for you, so I'll introduce them to you as we go along. And also you have access to a short paper that EastNets has produced, recognizing that the compliance journey to the new security control framework has some challenges, and how you might address those is within the paper and also will be part of the conversation that we have today. So with that in mind, let's think about some of the things we are going to actually talk about. Where are we, generally speaking, with regard to the industry and individual financial institutions conforming to the changes that are required in 2022? I'd be very interested to hear a sort of status check of where the industry is and how we make sure that enough institutions are taking a forward-looking, proactive view of conforming with the business implications, as opposed to just generally adhering to the bare minimum of the framework. And that'll be an interesting discussion. We also should think about the use of the different ways in which we can roll this out across a financial institution. What is the impact? How do you assess that it's working? And what are the implications for all the institutions? And what are some of the issues that we should think about when it comes to the practicality of working with third parties and within institutions as to how you adhere to the changes in the framework? But enough from me, really, because I want to introduce the panel. And thank you, everybody, for joining and for the prep you've given us. So let me welcome first Zahid Patel, who is the Group Product Development Management Director at EastNets. Philippe Simon, who is the Director of Product Management, Industry Engagement and Surveillance Solutions, part of the cash management team at Deutsche Bank. And also to Evie Zemegi, who is the solution delivery person responsible for the delivery of the SWIFT CSP in SEB Group. So thank you, all of you, for joining us today. And as I said at the outset, it'd be very interesting to frame this conversation. So why don't I ask each of you in turn to share some initial thoughts? And Zaid, I start with you, please. Over to you.
Sure. First of all, welcome everybody. I'm really excited to be here and talking about a subject that we're very passionate at EastNets is, how do we keep our payments and financial institutions safe and ensure that that companies can confidently transact into the marketplace. And really to set the scene, the SWIFT Customer Security Control Framework, it's in its 6th year of running, and it's evolved really off the back of major issues with regard to cyber attacks into the payment networks. And it really culminated from an introspective look at a very established ecosystem created by the leading banks of what the industry needs to do to combat the rising crime of financial crime. And these financial criminals are getting more sophisticated. And the banks, have traditionally lagged behind a step, but now is really, using the SWIFT initiatives, really welcome addition in terms of the latest control changes, particularly the mandatory focus around transaction business controls. And we'll talk more about that in the discussions. where the impetus is that it's a it's not a reactive approach. This is a proactive approach. It's making sure that you've got the necessary systems and controls in place, and in particular around the detection of fraudulent transactions. And for this, the first time we're seeing mandated requirements coming through under the Control Securities Control Framework for 2022. And we think this is a very necessary change. And at EastNet's actually our platform already designed these controls from inception. But nevertheless, the regulatory landscape is changing, it's evolving. The actors involved in creating malicious behavior are increasing in terms of their complexity. And I think technology providers have got a big part to play, working within this ecosystem in partnership with the financial institutions, with the regulators, using smart tech such as AI, machine learning, and blockchain to keep the industry safe.
So thanks very much for that, and some interesting points that I'd like to pick up on. It's a challenging world, and how the advancement that we're making as institutions within our industry are keeping pace with the sophistication of criminals that are always trying to be a step ahead. There's an interesting delta there between the two. So the fact that tech, and particularly various branches of the science of AI, might become more relevant and central to that is an interesting point. So thank you for that. Let's move on. From your perspective at Deutsche Bank, Leif, what are some of your opening thoughts?
Yeah, hi, good afternoon, and thank you for having me here. On the Swift Customer Security Program, I think what I would like to discuss a little bit is really the two angles we have to it. The first one, obviously, is the compliance with the Customer Security Controls Framework, as Said outlined, and that really is the key point for each institution or for each Swift member individually. Now, clearly, most institutions, especially the large ones, would have had a sophisticated information security framework in place already. But the Customer Security Program puts a more formal aspect to it, and it sort of establishes a level playing field for all the participants in the Swift network. So with that, we have a minimum standard now that everyone has to adhere to, and that helps to fix the problem of the weakest link, if you will. Now, clearly that is not a static thing, but it requires an annual process that you have to have in place, because the Customer Security Controls Framework is being upgraded every year to account for changes and for new threats that you have to look out for. And as such, you have to have that annual review in place to identify the changes and the new requirements, understand their impact on your infrastructure and on your control framework, and then, as and when required, implement changes to make sure you remain compliant. So I think that is a key aspect on your individual compliance with the Customer Security Program. The second angle to look at the Customer Security Program is, what do you do with that information that is now available out there in the market? If you go back to the times before the Customer Security Program, I think there was an assumption that everything that's being sent over the Swift network is secure. And that assumption has held true for many years until it came to those quite prominent cybersecurity breaches that Said was referring to in his introduction. So now that we have the Customer Security Program and we have the ability to actually request the compliance status of our counterparties, I think out of the, let's say, availability of that data arises a expectation to make use of it, so that you actually have a view on what does the cybersecurity status look like of your counterparties. So I think that's the second important angle, that as an institution in Deutsche Bank, we have started to consume that information and make that part and parcel of our own risk framework when we deal with our counterparties. So that's the second angle that we should keep in mind when we talk about the customer security program. And with that, back to you, Gary.
Thanks very much. And again, interesting insights. And I do think that as the bank partnerships extends into wider networks or wider ecosystems, then quite where risk and liability and compliance and assessments sits and is managed is challenging. So I do wish to come back to those two angles that you highlighted there, because there's a lot in that. So let's move on to close out this opening session. Evie, I'll ask you to share a few of your thoughts. Evie.
Yes, thank you. Well, I'm looking at from the maintenance team angle, maybe, because the work today has been really more difficult and harder to be to keep us updated to all the requirements and make sure that the work is still going smoothly and that you are collaborating and know who to work with, and you need to always make sure that the systems are up to date to the latest requirements. But it also makes the work more interesting. You can't sleep on the work. You have to be proactive and be innovative and be open for changes. And also make sure that you have time to learn new things. And also at the same time, you have to have a sustainable work situation and off-work situation, that you can't be working 24/7 without having vacations. But it's really important to know who to talk to in the bank. That's from me.
Okay. Thanks, Evie. I'm very interested to lead on a conversation about the impact, because, as was said, this is not new. This is the latest iteration of the latest proposed changes. So it's to what extent is it a radical change, or is it more of the change but taking it in a slightly different direction? And that touches on all of the points that you've just raised. So thank you for the opening remarks. I do encourage everybody to ask a question, make a comment. We have got some coming through, which is very good. But I did say at the very beginning, we have a couple of poll questions, just to gauge your view on where you are in your financial institutions with regard to understanding and adhering to the changes that we're talking about. So through the link provided, I'd ask you to respond to this question. Is your organization aware of the latest SWIFT customer security control framework obligations? And there's 5 options for you to choose from. 1, we are fully aware. 2, we are unaware. 3, we have just started. 4, there's confusion and help would be beneficial. Or 5, it does not apply. So if you could respond to that, then in a short while, I'll share the results of the poll, and we can follow it on for our discussions into this next part of the session, where we're going to a deeper discussion around some of the points that have been introduced by our panel. So Zahid, why don't I go back to you, because you started to outline one of the reasons why the changes have to align to the considerable challenge and sophisticated attacks that the industry is seeing. Indeed, warnings come regularly from central governments as well. So I suppose, what's your assessment of where the market is and the level of readiness or preparedness for this session? And what are some of the things that they really need to think about against the background of not only the compliance, but the practical business implications which you touched on? So over to you, Zahid, for some responses to that.
Yes, I would describe that the 2022 changes that we're seeing from SWIFT is a really radical change to what we've seen in the past. You've got, first of all, some real mandatory changes around having, for example, a fraud prevention and detection system. And this is under the transaction business controls. And under that, in the section 2.9, there's 7 key elements of that. And one of them is about identifying really anomalies in the patterns of the messages and the transactions being executed. And I just want to draw upon, how, if we look at the journey that SWIFT went through on the customer security program, it was really started off as a reaction to the malware attack to the Central Bank of Bangladesh. And there are a number of things that are being addressed in the latest control security program, such as the ability for companies to monitor activities around traffic outside of normal hours. And one of the classical things that these ransomware attacks is they develop intelligence around the operations, and in the case of Bangladesh, they were hit by this cyber attack outside of their normal operating hours. But also it's tracking unusual or abnormal amounts of transactions. And again, drawing the experience from that particular use case, which is well known within the industry, you had 35 fraudulent payments to the amount of $1 billion, and 30 were intercepted as being unusual, but 5 of them were released and approved. And again, where were the checks? And in fact, the confirmation process was manual checks from between the Central Bank of Bangladesh and the New York Bank of Federal Reserve. And again, technology has a big part to play in this, and including having things like an automated confirmation process and having that reconciliation process around working in a more real-time basis. But it's the aspect of identifying anomaly behavior, which I think is the radical change here. And how do you go about doing that? Because you have thousands of transactions being processed. And to detect unusual behaviors around beneficiaries, around the source, about the currency, I think you really need to have machine learning and AI adopted extensively as part of your operations. And for that, I think companies need to start embracing that, and they've got to look at where do we need to go to in terms of our controls. And these are procedures that SWIFT have outlined, but ultimately you've got to have a balance between tightening up your procedures internally, but also you've got to have the appropriate systems in place which allow you to detect and prevent such activities. And just my final point is that the heightened risk of cyber warfare and attacks, it's only growing day by day. We can see the current political situation in Ukraine, and already Ukraine is being subject to potentially state-sponsored cyber attacks to their financial system and other important infrastructure within the country. And we've seen examples of this in the past. And in 2020, we saw SolarWinds, a big US technology company, which was attacked by malware and had that impregnated within its software. And that software has been used extensively within US government offices. And they rolled out an upgrade without knowing that they had this malware sitting in their software. And in the order of 18,000 organizations were infected. And these are some of the most securest institutions in the US, including the Pentagon, the US Treasury Office, and the cause of this was actually, and this is from the US Foreign Intelligence Services, was very much foreign actors involved in this. So it's getting increasingly complex out there. We're talking about often state sponsors in this, and the monetary involved in this and the disruption is huge. It could be catastrophic if the Bangladesh whole thing didn't get spotted in time.
Thanks very much, and thanks also for bringing it to life with those practical examples. And as you rightly say, it isn't just bad actors or fraudulent actors, it's actually more state-led, which is a very interesting variation. To what extent, without fully going into the whole issue of AI, to what extent do you think that banks are understanding of, because there's talent, there's skills, there's need, to understand how you might use pattern recognition or various elements of advanced AI to understand not only trends, but what's a good payment from a bad payment, particularly in a cross-border real-time situation? What's the level of use of that or gearing towards that?
Sure. And I would say, Gary, that the banks have come through a very interesting journey. They've traditionally had very complex legacy systems, huge data centers, all kind of managed within the banks. And they've been going through a transformation, really, through the digital technology revolution that we're seeing. And they've been embracing, for example, cloud. And that is now seen not necessarily as a issue in terms of data security, and we've seen great adoption. But in terms of AI, this is really the next stage, and we are seeing banks embracing AI and machine learning. The cost of compliance in terms of the human resources to identify complex, suspicious behaviors is, first of all, hugely intensive. The manual effort involved and the cost of compliance just continues to increase year on year. And that's partly driven by the risk of regulatory fines and enforcement actions. Nobody wants to be on the wrong side of the regulator by not spotting such suspicious behaviors. So AI has got a terrific part to play in this, in terms of being able to identify patterns and suspicions of behavior which can ordinarily not be identified by pure human intelligence. Secondly is the ability to digest that information, and it's a big data exercise here, all those data points, being able to provide a real-time, near real-time view with regards to behaviors. That's very compelling, and certainly you couldn't do that with purely human intelligence. But fundamentally, it's giving you a different perspective altogether. Using things like predictive analysis, being able to see further out and really bring in a different, new perspectives. Using smart technologies such as link analysis, which allow you to look at different nodes of data and the interrelationships of those, and start to bring what we call the joining the dots, being able to look at things from a holistic perspective rather than data silos. And I think the banks are really embracing this. They're seeing the benefit in terms of the reducing the cost and complexity of having very large compliance functions, being able to really intervene. And effectively, they are saving a huge amount of costs in terms of and penalties by making sure they're compliant. At the end of the day, the banks need to make sure that they're identifying these suspicious activities, they're intervening, taking necessary steps. And my final point is the regulators themselves have put pronouncements out there that they expect firms to be using AI, machine learning, and no longer can you look at your compliance risk or your fraud risk really based on a rules-based solution. And therefore, the need to have more automated solution, real-time detection, being able to block these type of transactions before they get fully executed, has significant sea change in the way technology has been adopted within the payments industry.
Okay, thanks very much for that. I want to move on to you later on a couple of things, but one of the conversations that we may get back into is this question of what's an abnormal transaction, because it's no longer a set pattern of check for these following things. It's a wider understanding of the nature of the transaction and where it's going to. But let me firstly go back to the poll question. So thank you everybody for joining in and sharing that. The question that I asked was, is your organization aware of the latest SWIFT customer security control framework obligations? And just rounding the numbers, we are fully aware, 53%, which is a healthy number. We are unaware, 9%. We have just started, which is interesting, 28%. But no one's too confused, and it doesn't apply to a few people. But it's interesting that the just started number, perhaps I feel, should have been slightly higher. If I turn to you from a Deutsche Bank perspective, what you may have an initial thought on that, the survey responses, but what I'd like to do is to go back and pick up the controls, the framework around those two angles that you touched on, because they're very important. So let's pick up on what you said there, how you manage the internal implications of the framework, and then the implications it has for you on the third parties, where you need to have the qualification status of what they are doing to conform to it. And I suppose there's a sub-question to that is, how do you assess that what they're doing in terms of the data and you consuming it is of the right quality? Is it sort of a minimum level that they're hitting, or you got a higher standard for the quality of data that you're expecting to see? But I'll leave it for you to pick up on those points, and we can progress the conversation. But you may have an initial view on the poll. Over to
absolutely. Absolutely. Thank you, Gary. And that's actually quite a handful of questions and points you mentioned there. Let's take them in order. So before I go there, let me quickly comment on what Said mentioned. I mean, you obviously spent a lot of time talking about, the, shall I say, ramifications of Control 2.9, which is really one that probably causes most of the institutions headaches, because it's not a black and white one, which is so prescriptive and where SWIFT tells you what exactly it is you need to do. It's actually one where they tell you, well, you have to find abnormal behavior, but what actually is abnormal behavior, right? So that makes that one so difficult, and that is where rule-based and now, of course, more and more AI and ML technology comes in to help you with that. But I think, to be fair, that's the most difficult one to grasp. In general, to come back to the point of compliance, I think, as I mentioned in my introduction, what you have to have in place is an annual process to identify the changes, the new requirements, assess their impact on your infrastructure and on your control environment, and then implement changes as and when required to ensure compliance with those changing requirements. Another point there is you also have to have evidence requirements. So you need to define what it is that can serve as evidence to prove that you have implemented the controls and that they are fit for purpose in terms of operating effectiveness. So I think that's another point you need to think about, because ultimately, especially now that SWIFT is introducing a mandatory requirement to have an independent assessment of your self-attestation, you need to be able to prove what you are claiming. And for that, the way we do that actually is by means of an interdisciplinary exercise that we conduct every year, where we look at the controls framework, we look at the changes, and then we really work with our colleagues in IT, in risk control, in information security, to make sure we understand what it means, we understand what it is we have to have in place, we get that implemented in case we don't have it yet, And then we also can produce the evidences to demonstrate that indeed what we say we have in place is actually in place. So I think that's an important aspect coming, speaking to the point of being compliant as an institution. The second point, again, is what do we do in terms of consuming the attestation data of our counterparties? And that also lends itself a little bit to the poll questions here that we're seeing, because it's quite interesting. In the early days of the customer security program, we felt that there were still quite a few institutions, and I guess including ourselves, still learning how to interpret the controls framework and how to respond to it in a meaningful way and in an accurate way. So a bit of an anecdotal evidence here. In the early days, we had a counterparty that had attested itself fully compliant with all mandatory and advisory controls. And then within the time frame of 3 or 4 months, they got compromised twice, and they reached out to us asking to block their accounts, to make sure we can control traffic on their accounts. So it showed, and I don't think they were just, not giving a true representation of their control status or control compliance status. I think it was just, that learning curve they had to go through to understand what exactly they needed to do to properly protect their environment. And then, of course, that also shows us that no matter how many technical controls you have in place, it will never be a 100% security net, right? There will always be instances where someone will still be able to compromise your environment and to hack your infrastructure. So if I look at the polls now, we're saying, fully aware that's, a little more than half of the population here on the call. And then we have just started is, close to 30%. So that shows that, majority have a good idea of what it is they are talking about, but may still, need some more help in terms of understanding what exactly are the controls that are defined in the customer security control framework. And I think that really deserves some time and effort to familiarize yourself with it and go deep into it. We have gone through that exercise as well in the beginning, actually, when we did our CSP attestation for the first time. It was a massive exercise to really understand which parts of our infrastructure are in scope, where do we need to look, what do we have to have in place. So I do appreciate that that's not an easy one to do. It does get easier, however, once you've started and then you perform that as an annual exercise. Because once you have established the baseline, you really only, quote unquote, need to look at what has changed and then focus on those areas where there was change, and then make sure you basically keep up with the change and make the changes on your side to accommodate the improved security control framework. So it's an evolutionary or iterative process. And I would agree that if you do that for the first time, it may be a bit of a headache. Now, in terms of consuming the counterparty attestation data, that's an interesting one also. So in the beginning, you can imagine that there were still quite a few who were not fully compliant. And we didn't, at no point was our intention to discontinue doing business with anyone just because they were not compliant with 1 or 2 or even 3 of the controls. So it was really a matter of understanding why were they not compliant. And if you look at the attestation, typically what we found was that it was not just when there was an element of incompliance, it was not just plain incompliance. It would typically be something like, we are not yet compliant with this particular control, but we will be compliant by this and that date. And that basically showed us that, well, they may not have implemented the control to the fullest extent yet, but they have a plan of how to do it and by when. So that gives you the reassurance that they are on track to become compliant. And where we found areas of incompliance, now, first of all, I must say now that we are in the 6th year running of the customer security program, it has matured a lot. And if we look at our population of counterparties that where we consume the attestation data, we find very little areas of incompliance only. And they are typically minor things that, relate to an advisory control or so, where we would say, okay, this is not the most critical thing. Like, I mean, you could use the analogy of a car. If the brakes aren't working, well, that's a massive problem and you don't want that, right? But if it's just maybe, one of the headlights, then that's something you can live with for a certain period of time, because it's not such a critical problem that would really expose you to a lot of issues. So you have to also look at which are the areas of incompliance, if there are any, and understand if they are really critical elements or if they are things that you can live with at least for an interim period. And then our approach was, now that we have so little counterparties that show elements of incompliance, that we would typically seek the dialogue with them to understand what's going on and what they are planning to do to remediate any area of incompliance. And with that, I think we have been able to have a good understanding of what the control status or the compliance status of our counterparties looks like. And as I mentioned, there has never been any debate about stopping doing business with anyone, because that is not the intention of the customer security program, right? In fact, it's quite the opposite. The intention is to continue doing business, but in a more controlled environment than we had it before. As I mentioned in my introduction, right? In the old days, we assumed that everything was secure. Now we have the means to control that a little more and get a good view on where we have potential areas of issues.
So that's very interesting. I want to come back to some points there, but Evie, I'll turn to you in a moment, because it's quite interesting around some of the points that Leith was saying about, the consuming of data from third parties, the recognition that if you've kept a pace with the framework over the years, then your changes are not so dramatic. So before you respond to that, if you will, I would like just to introduce the second poll question. So again, through the link provided, the question this time is your organization prepared and ready to meet the end of year deadline to comply? And there's 5 responses, so please choose the one most relevant to you. 1, we have started the project and confident to meet the deadline. 2, we are not prepared and at risk of missing the deadline. 3, we have a project, however, we may not be ready for the deadline. 4, we are not prepared and would need help. And 5, it does not apply to us. So please respond to that, and I'll share the responses in a while. But Evie, go back to some of the points that you heard there from Lee, particularly the internal and the management of it all. What's your thoughts from the SEB group?
Well, I liked a lot of things that Leif said, because it is an annual process, and we have handled it as a project before, and maybe there have been different project managers who has been driving it. So from last year we have the new role, which I have now, that to be the coordinator and to make sure that it's how do you say it? It's a process that goes around all the time. And of course, this has meant or to have these new the impact of having all these new requirements. It gives us more administration. There has been a lot more of documents and policies and reports to consider. a lot of things to keep in mind all the time. And since there is always new stuff coming in, it's always need of training and information sessions. But all this also gives us more security awareness, because we have to talk about it all the time. We have to involve different parts of the bank, and that is what I have liked to be the coordinator, that I have to talk to everyone from business side to work places or infrastructures, application management, and security teams, and it's really interesting to see how everything has to work together, and that we have to collaborate, and everyone needs to know, needs to understand the requirements, and needs to know what their responsibility is. And although it's important to keep a track of the new what is changing in the framework, but at the same time, it is really important to know, if I'm doing this change, could this have an impact on the control sets? Are we doing a severe change or not? So, and that is something everyone needs to know and keep it in mind. And we as a bank, we have different kinds of control sets to keep up with. So it's one thing which is important is maybe yeah.
No, please just finish that. Then I've got a question.
Yeah, I was just thinking that when we have so many different control sets, we need to make sure that we don't work too much, but that we can save time by comparing them and maybe reuse evidences for another requirement and not just this requirement.
So it is a case, which is where I was heading towards, of the evidential requirement that's necessary. I mean, you're in a situation now where you're looking at the specific impact of changes to this year and monitoring those on the back of all of the governance structure that you've had in over time. That I assume is the approach. So going back to the earlier conversation, it's the challenging but incremental impact of it all. How do you measure that it's working? How do you evaluate that the collective sort of involvement of different business functions are all aware of their obligations, responsibilities, and from a bank executive point of view, if you look down, they can feel satisfied that compliance is being met? How does that work, Evie?
Well, one thing would be that I don't have to nag. And now it's not easy to see that because it's when you're doing the assessments, when you see, when you understand, when you talk to the people that who has the evidence, that to make sure, then I can see that they have understood it. And that,
right.
But my role as a coordinator, I also have to make sure that they know about the changes.
Well, absolutely. So that actually refers me back to some of the questions that have been coming in, which as we go into the last sort of 10 minutes or so, please do submit some more. I'll share the poll results in just a second, but we've had a series of questions around 2.9. I don't think we'll ever agree just at this session what an abnormal transaction is, because it's going to be relevant to your organization and the customer behavior that you know is the norm, and then what's outside of that, overlaid, of course, by fraudulent activities coming in from sophisticated actors. So Saeed, from that point of view, where do you think this needs to go next, not just to conform to 2002, because this is the latest iteration of the framework, but what should now banks be thinking of differently? And the other point is, and one of the questions that came in, is there sort of an allowance for the size of institution you are and what you should be doing and how you might be assessed? Zahid.
Sure. Yeah, and actually, I just want to pick up on the question that came through as well about monitoring of abnormal transactions, and those transactions, of course, are unique to that customer. So the way the AI journey is going on this is that AI models are being tailored based on customer profiles. They're not generic models. These are models which understand all aspects of that customer's footprint. And you can then build up a real picture in terms of abnormalities that are out there. So let me pick up the point in terms of where we could be going next. It's very clear to me that having real-time detection is imperative. It's not just about finding the issue post-event. It's the ability to block those transactions or those messages before they're fully executed. And really, you've got to have then a level of confidence and trust in your systems that they're going to behave in an optimum way. And for that, it is a partnership, between vendors like EastNets working with the banks in a collaborative way to ensure that they can share data with us, that we can optimize our models around their business. And I think that's an important thing. And, I see the regulators really helping in creating that ecosystem, bringing tech firms, bringing the financial institutions together. We've seen great initiatives from regulators such as the FCA around the regulatory sandbox. We'd like to see them take that a step further and really start looking at how we can work very smartly using AI, sharing data. And one of the biggest challenges that we have is getting access to good quality data. And that's what we'd like to see going forward. And I think the regulators can certainly help with that. But I also want to very briefly just pick up on one of the first poll question, if that's okay, Gary. Just to highlight again in terms of what are the deadlines for this year. Companies, the banks have to put an attestation in by the end of this year that they have got fully compliant systems in place. So even if 27% are starting that journey, you've got to complete that journey before the end of the year and ensure your attestation fully accounts of the obligations that you have. And of course, if I was a senior manager, and I want to draw on the UK specifically, where you have the new accountability regime called the senior manager certification regime, that if I was in that 7% bracket where I was unaware of the obligations, or in the 1% bracket where I was confused, then I would be really worried, because the buck stops right at the top now with regards to the UK SMCR regime. So first of all, I'm really pleased that EastNets is helping to educate and bring our expertise through webinars like this. But I do see this as very much a partnership. That this is, we don't see this as an incremental change. This is a real sea change in terms of particularly companies who haven't got fraud detection systems, that it's time to have one. And to have one which has got the appropriate technologies in place, that it's keeping their firm safe and really protecting the wider community out there. And after all, SWIFT is an ecosystem. All the banks are interconnected through there. One major failure there is a poor reflection of the whole industry.
So I think there's some key points you raised there, just to underscore it. The technology is an essential contributor to how this is going to be managed, but the talent and the necessary deployment of the technology may not be fully baked in many organizations, because it is a different skill set. What are you going to do with data? How do you analyze it? I think the holistic approach is very important to come out as well, yes. Particularly when you have the dependency legal dependency, regulatory dependency on the senior management regime in the UK. So that's interesting points. Leith, if I go back to you from the point of view of keeping pace with this across Deutsche Bank's global network, how does that all start to apply? Because there is still this, and it came out in questions again, there's still not quite and there never will be, the absolute definition and interpretation of a regulatory framework, but you've got to be clear on your interpretation and the evidence of it. How does that play out across Deutsche Bank's more global network, Leith?
So clearly, being a global bank and being present in many countries and also being the provider to different client categories, of course, makes the whole thing a little more complicated because you have to account for a number of different scenarios, obviously. So I think we got quite a lot of questions on that point of Control 2.9a and what actually constitutes an abnormal transaction. And there is no universal answer to that. You really have to ask yourself, what products do I have? Who are my clients? And how are my clients using my products? Now, that is the very basic information you have to have before you can even start thinking about, well, what would be a quote-unquote normal behavior versus something that does look a little bit abnormal. To take an example, I mean, if you are in the retail banking business, a transaction of 100,000 euros may be abnormally high. If you are a global transaction bank and you service corporate clients, well, 100,000 euros is probably more of an average amount. So nothing particularly abnormal about that in a corporate banking context. So that is where you have to start looking at it. And it's just something that requires you to do an in-depth analysis of your business, of your clients, of your products, and then from there really understand how you can define normal versus abnormal behavior. And then even if you do that and you do it in a very concise way, you will never get 100%, right? Part of the problem is also that threat actors are learning and they are changing their behavior. I mean, if we go back to the very prominent cyber threats that Sahid was mentioning, particularly the one of Central Bank of Bangladesh, where there were relatively few payments of enormous amounts. Now, that was basically the idea at that time. But 2 or 3 years later, the behavior of threat actors had changed completely, and they were doing pretty average amount transactions, but many more of them. So ultimately still sort of trying to catch the same amount of money bottom line, but spread over many more transactions so that they were able to camouflage that better than with just a handful of very high amount transactions. So that is why it's important to really perform that assessment and re-perform that on a periodic basis, because things change. Absolutely. And as we come to the end of this session, there's a sort of correlation back to the fact we've always tried to analyze our business, which needs to happen in a real-time cross-border global situation against the backdrop of, let's be honest, payments is still a profitable business as part of the transaction services, activities and functions of organizations. So there is a way in which it becomes beneficial for the fraudsters to continually try and reinvent the way that they put together fraudulent activity. We are coming to the end. What I want to do is to share with you the results of the second poll question. Again, thank you very much for taking part. The question asked, is your organization prepared and ready to meet the end of year deadline to comply? We've started a project and confident to meet the deadline, 60%. We are not prepared and at risk of missing the deadline, that's a low 2%.
We have a project, however, we may not be ready for the deadline. That's a sort of a slightly worrying 18%, and then the rest are kind of not prepared, or it doesn't apply. So as we come to the end, maybe go back to you. You may have an initial view on the second survey results, but over to you for a final comment as well.
Yeah, if I can just comment on the survey result, I'd say, first of all, reach out to EastNets. We'd love to help out the 3.7% who need that help. Our ethos at EastNets is to keep the industry safe. And we believe that, through collaboration, through working together with the financial institutions, with working with great technology companies such as EastNets, we can really transform and the industry and keep really the industry safe from these nefarious actors out there. My final thoughts on this is really that the world is changing. The dynamics of digitization around payments is building at great momentum. We know that the financial criminals want to stay one step ahead, and they have armies of technologists themselves. It's really incumbent that technology companies, regulators, financial institutions come together and ensure that we are one step ahead. And we are very supportive of the SWIFT customer security control framework. We believe these mandatory changes are essential. We want to work with the industry to ensure that the industry is safe and secure. Our view is at EastNets is technology has a great part to play. It's an enabler to keeping the industry safe, but it's fundamentally ensuring that we can bring the peace of mind that is required within the banking sector on quite a complex area where these actors are changing behaviors all the time. And only through partnerships and through changes in regulations and controls that we can really make the necessary change. So I'm delighted really
thank you very much.
Thank you. And I'd like to also thank my fellow panelists here and the audience. It's been it's been a terrific engagement. Would love to see more of these type of engagements. We're here very much to create an awareness and traction within the industry on an important matter.
Yeah. Well, as we often say at these sessions, there's not a right or wrong. Abnormal transactions proves that, but there is a way of thinking about individually and collectively how we tackle these issues to the benefit of the institutions and to the detriment of fraudsters and others. So again, I would like to thank you for your contribution. The speakers, I trust everybody will join me in recognizing their insightful contribution to the discussion. I'd like to thank everybody for joining us today, particularly for the range of questions that we've had and for joining in the poll. That's always very useful to get a feel for what the industry is thinking about and how it's responding. So with that in mind, I'd like to thank you again for joining. Enjoy the rest of your day, and I'm going to close off the session now. Thanks for joining. Thank you very much.
Thank you.